All right. I think we're live. We are live here on the Beat the Odds of Business and Wealth podcast. And I'm here again with Josh Spurrell, who is in the Philippines today. Hey, say hi, Josh.
Hey Trevor, how you doing?
Man, doing great. We actually have a little bit of summer here. I know it's always summer in the Philippines. It's always hot anyways. It could be hot and rainy, but it's always hot. How are things going for you? You had a little vacation in Kelowna. Now you're in the Philippines. What's going on?
Yeah, I mean, I was supposed to be in the Dubai office right now, but because of the bombs flying in the Middle East, they decided I can't fly to Dubai, even though uh, kind of strange when you really think about it. But this show's kind of about the numbers. I'll throw a number out you about how strange it is. It's like Air Canada will not fly to the Middle East, but there's, I believe the official death count in Israel is 30 people. For perspective, 30 people die every single day in traffic accidents in the Philippines. I looked that up. So every single
30.
day, all the time. Yeah, 30 people. It's like,
Yeah.
yeah, it's 12,000 people a year, I believe, die. So, but numbers and safety is not our government likes to plant fear about things that may or may not be dangerous, and that's why we have this podcast to show people what they can do with their money and what they should actually be doing based on numbers rather than fear. And hopefully, it's a good start for their research. So today, I want to talk about Trump's latest tariffs. We'll call it. He says 35% tariffs, and what the average Canadian should think about that, and how that should affect your investment decisions.
Yeah, for sure. So 35% tariffs. I mean, we already have, I think there's a 50% tariff on steel and aluminum. And now is there going to be an additional 35% on, I think it's kind of a blanket 35%. I didn't really read through it. And then he said, if there's any retaliatory tariffs, then we're going to put, even more on top of your tariffs. And it's basically a tariff war trying to break the back of the dairy cartel here in Canada and come up with a more level playing field. I think there should be free trade, like literally free trade between at least the provinces, if not between countries. Just makes things better for everyone. But I can see where Trump's coming from. But, let's dig into these numbers and see how Canadians should be, structuring their finances and what they should be prepared for.
Okay, so I'm going to show this here to you, Trevor.
All
Just
right.
1 second.
Sure.
Share my screen with you, and bang. Okay. So here is the letter, and it's to the Right Honorable Mark Carney. I feel like maybe it should have just been addressed, "Hey, bro," because I think they're a little better connected than people would think. But you know, dear Mr. Prime Minister, it is a great honor for me to send you this letter in that it illustrates the strength and commitment of our trading relationship and the fact that the United States of America has agreed to continue working with Canada despite Canada having financially retaliated against the United States. It goes on to say, starting August 1st, 2025, we will charge Canada a tariff of 35% on Canadian products sent into the United States, separate from all sectoral tariffs. Goods transshipped to evade this higher tariff will be subject to that higher tariff. As you are aware, there will be no tariff if Canada or companies within your country decide to build or manufacture a product within the United States. And in fact, we will do everything possible to get approvals quickly, professionally, routinely. In other words, in a matter of weeks. If for any reason you decide to raise your tariffs, whenever the number you choose to raise them by will be added onto the 35% we charge. Interesting. And he goes on to talk about how, the tariffs are, because of fentanyl, because of dairy, it's a threat to national security. And if Canada works with me to stop the flow of fentanyl, we will perhaps consider an adjustment to this letter. These tariffs may be modified upward or downward, depending on our relationship with the country. You will never be disappointed with the United States of America. It's a great.
Oh my
It's
gosh.
it's it's become rather comical now, but the first part is like, where was this posted? This was posted as of the time of this recording. The only place that this has been posted was on Trump's Truth Social. That's it. So the next part to go is because you can go to the White House. website. You can see that as of right now, this letter, it's been, probably about 12 hours, a little more than 12 hours since this letter was posted. It doesn't exist anywhere other than Trump's Truth Social. And so wherever you're seeing it, it's basically they've taken it from there. And, here we are. We're discussing the tariff war on Truth Social. And welcome to 2025 that we have.
Okay, so social media. I mean, if without social media, we wouldn't know what's going on in the world. Basically, it's a tweet. He's tweeted out his tariff policy against Canada. Great. All right.
That's right. And let's, what does the market actually think of this? This is, I think, very, very telling what the market actually thinks of, because we've seen tariffs removed, we've seen tariffs scaled back, we've seen deadlines extended. Now we see, official letters that appear only on Truth Social, but not on official government websites or any other, official notions. What does the market actually think of it? Here is the TSX as of today. It is down 0.4%. 0.4%.
0.4.
Yeah, 0.4%. Not even down 1 percentage point. Very close. Very close. Like there's the Canadian market. Pretty much at all-time highs. That's what the market thinks. So you can trust that government will generally do what's in their best interest. And by their best interests, I don't necessarily mean the people's best interest. I mean in their best interest to get reelected. But you can also always count on the market to do what's in their best financial interest.
Oh, for sure. I've been hearing some things out there that the M2 money supply globally has expanded tremendously in the last little while here. Maybe you can speak to that, and you can see what's going on with the S&P. Maybe talk to that a little bit, Josh.
Yes. The global liquidity is expanding. Like even in the U.S., there was a period of contraction after the quantitative easing following the pandemic, but now they're back in positive territory. And I think there was always some liquidity out there, but there was some uncertainties with the tariff discussions, and I think that is the point. Is the key is these tariff discussions tend to come up all the time whenever the market gets a little bit too hot, because when the market gets a little too hot, what happens is it sucks liquidity out of the U.S. bond market. And when it sucks liquidity out of the U.S. bond market, all of a sudden the interest rates go up. And because the U.S. government is unwilling to take any sort of financially sustainable fiscal path, all of a sudden their interest expense goes up. And so we have this, the perceived war that's happening with, Canada and Donald Trump, but the real war is what's happening between Donald Trump and Jerome Powell on the interest rates.
Yeah.
And so just like clockwork, whenever the market gets, too hot, all of a sudden Trump, he kind of sounds the tariff alarm bells in a kind of a chaotic mechanism where, for example, that there's 35% out of nowhere. And, this was not the only letter that Trump sent out. Trump sent out, these letters to other countries at the same time. But it's really, it has been the path, because if the market gets too hot, all of a sudden you're going to have interest rates rise. And he has an uncooperative dance partner at the Federal Reserve in Jerome Powell. And so, and why do I think the market agrees that this is unlikely to be anything at all, if it's even if it's implemented at all, it wouldn't be sustained. And I think that's what the market's perception is of that right now. Because if the market thought that there would be 35% tariffs, the CBC will tell you that there's 35% tariffs and the sky is falling and Trump is the next Hitler. But the market doesn't lie like the CBC. The market only acts in their financial interests. And if the market actually thought, and I don't mean, the retail traders, I mean the institutional investors that control the the billions of dollars. If they actually thought that there was going to be a sustained 35% tariff in Canada, the stock market would have collapsed today. But that hasn't happened, right? We're not even down 1 percentage point on the day. And so there you go. Now we're at 0.35% as of right now. So, I mean, what to think about it is you're going to hear all of the same saber rattling that Trump is the enemy and he's the problem with our economy, which is good for that's good for the Liberals too, because as long as they have a boogeyman to blame, they don't have to take responsibility for. I mean, I think our jobs numbers came out today. We're still, about 6.9% unemployment, and the wages are pretty much frozen. The median Canadian wage hasn't moved at all in basically a year. And so without a boogeyman to blame, they'd have to take responsibility for that. So they love the chaotic trade discussions because it gives them someone to blame for the financial situation in Canada. But the market ultimately doesn't believe any of it. And
yeah, I mean, everything seems to be going pretty steady with the market. I even looked at other things today. And it looks like it's going strong, but there was I'm not sure if it was actually reported on the CBC, but earlier in this year, just in the last few months here, it was shown that the government of Canada was selling off U.S. Treasuries. Is that true? Did that actually happen? They sold off a whole bunch of U.S. Treasuries?
I don't know if it's that significant, really, in terms of the U.S. Treasuries that they sold off, and what they bought back, if it's denominated in U.S. dollars in equivalent. So I can't really speak to that right now, Trevor. But I don't believe they've materially reduced their exposure to the U.S. dollar, to my knowledge, anyways. I haven't seen any data that says that. But would they have sold short-term treasuries and bought long-term bonds, or
right.
other instruments denominated in U.S. dollars? Potentially, right? But I don't believe the Canadian government has materially moved their exposure to U.S. dollars, because I mean, what would they buy in its place? Would they buy another crappy fiat currency? Certainly they're not going to buy any gold, like responsible countries have been buying hard assets, right?
Yeah.
I don't think they would. Essentially, they're operating on the same fiat Ponzi system, which is, the U.S. government is supposedly at one time was based on gold, still has the largest gold holdings, but no longer ties their currency any relation to gold. And every other pretty much every other Western country bases, holds U.S. Treasuries as their main reserve asset, and so that's still the fiat Ponzi game that everyone's playing. But ultimately, does the market think that there's going to be a big pullback in international trade? It's like, no, the S&P 500 is pretty close to all-time highs. The TSX is pretty close to all-time highs, and that liquidity is starting to flow into the market. And where does that flow? It's like we have Bitcoin at 159,000 Canadian at this point. So what does the market actually think? It's like I think the market agrees that they're waiting for the new regime, and I don't mean the one that you elect. I mean the new regime at the Federal Reserve, where Jerome Powell's appointment will be up in May, and I think the perception is that we're going to get a very dovish replacement to Jerome Powell, and the money supply is going to increase in the U.S., which means it will also increase in Canada. Why is the Bank of Canada, why are they stuck right now at their overnight rate? It's like, well, because the further and further they get away from the U.S., the further they get lower than the U.S. overnight rate, the weaker our dollar gets. And so even if the economic data is not that great, reducing rates too quickly and torpedoing our own dollar here in Canada, it's like chopping off your arm to save your leg. It's like it's not really a solution to the problem.
So we can safely say that Tiffany is not going to reduce the rates anytime soon.
Tiffany McLemore, yeah, Tiff. Yes. Yeah. So, I mean, could he reduce it by a quarter point? Sure, but I mean, in fact, I still think we see another cut or two by the end of the year. But I think they're very cautious in their approach on, how slow Jerome Powell has been, right? And so it almost should be, uh, it's like one of the mandates. It's like, we all think of employment and inflation, but at the same time, if you can't purchase goods and services internationally with your currency, it's like, well, that's kind of a problem too. So and right now I think that's probably the biggest blockade to the Bank of Canada reducing their interest rate is the fact that Jerome Powell isn't reducing is in the US. And so this is the game that we're playing, and I still think we're playing it. And so, is this 35% tariff any more serious than the last few? It's like, well, I would say it suggests that the market doesn't believe so, and the fact that this is really what we're looking at is we're looking at a letter that hasn't been printed to any official government source at this point. It's not important enough for Trump or his team to post it to any official government source yet. And the market has barely even moved because of it. The market has barely even moved because of it. And I would suggest a lot of the weakness today in the Canadian market is probably more due to our jobs report that says, basically shows zero wage growth in the country and unemployment, hovering still around 7%. So, I mean, I think that's the point where people need to see. It's like it's kind of a lot like myself, where I can't fly to Dubai. Air Canada won't fly me to Dubai. I got to fly to Manila first, and then I'm going to fly to Dubai on Emirates from Manila. No problem. Strangely enough, how you can fly to Dubai from anywhere on planet Earth except who's interrupted a lot of the flight patterns is all the countries who are, losing a lot of wealth to the United Arab Emirates. All of a sudden, there's not as many flights coming out of those countries anymore. So, but easy enough to get a flight from to Dubai from Manila. So, that's going to be my path there. And plus, I get to check on the Manila office. But it's just a lot like that. It's just like what's the actual danger? It's like but we have to understand that's the psychology of most investors is they just look at what is broadcasted to them and they overemphasize those risks. It's like most people would just overemphasize, if I tell the average person, say, yeah, I'm going to I was telling people I was going to Dubai when, the 12-day war was still going and people are still asking me, it's like, well, is it safe? I was like, yeah, it's totally safe. It's like what's not safe is like me traveling back and forth from the Fairmont where I stay in Manila to our office in BGC, where every time I think I might die. So I mean, one of the grab cars that I had a seatbelt. That was nice. That was a nice surprise. It actually had a seatbelt. Most of them don't. It's like, I mean, that's a real number. There's approximately there's on average, over 30 traffic fatalities every single day in the Philippines.
Yeah, and how many people died in that 13-day war?
So, official counts put the death toll in Israel to about 30. Okay, and they put the death toll in Iran to about 900. Now, it's very. I'm not trying to diminish, deaths. That's not the goal, but the goal is to proportionally understand risk, and the average Canadian right now would actually think that being in Manila is somehow safer than being in Dubai, and it's like that's actually not the case. It's anytime you take a car or you walk anywhere on the road, it's incredibly dangerous.
I remember
here in Manila.
I remember the time when you were in Manila and your phone got stolen right out of your hand. How many times has that happened in Dubai?
Never. Yeah, I never feel like I'm going to get robbed.
Yeah. I think you can stop your screen share now and we can see you.
Yeah. You just shut that off here, Trevor. There. So I mean, you know, that's that's the uh, that's the purpose that everyone needs to understand is the things that are put in front of you to seem risky are usually not the biggest risks that you have. And you talked about the global money supply increasing. It's like, yeah, that's likely to happen. The big, beautiful bill, we always knew that they were going to print their way out of it. We always knew tariffs were a distraction, that cutting was a distraction. They couldn't
Mm-hmm.
cut their way out of it. They couldn't tariff their way out of it. They're going to print their way out of it. And, here, here we are. They're rattling the saber horn, rattling the sword as loud as they can, and the market isn't even blinking at this point.
Yeah.
And so, what is what is the bigger risk? The bigger risk is not holding hard assets. I mean, that's the bigger risk. Am I going to sell any of my Canadian dividend paying stocks because Trump puts a two pager up on his Truth Social? Not at all. Do I think he could levy a tariff in the short term? I mean, if you had to ask me, gun to my head, I don't even think we'll see a substantial tariff at all. And if we do, it'll be rather short lived because, what would happen with a sustained 35% tariff? I mean, something that went beyond a year. I think it would be supply chains would be massively disrupted in both jurisdictions. So, I don't think it would be. I think if Americans start going to the pump and they start paying $5 a gallon, $6 a gallon with midterms coming up, all of a sudden you'd see tariffs roll back on Canadian oil and gas. So I think that's more of a reality of the situation. So the fear that will be put in front of you is the tariffs and Trump. But the fear that you should really be concerned about is, the increase in the fake fiat currency and basically not being exposed to high quality assets that will actually preserve or, increase your wealth in real terms.
Mm-hmm. So, to bring it home, people who've been watching this podcast for a while and have taken some moves, I would say it's not a "I told you so" moment, but reality is happening right now, right? People are, the funds and the wealth is being transferred to the assets. Like the asset prices are going up, the asset values are going up, Bitcoin is going up, the stock market is going up. Like we're seeing all-time highs here. And so if you've been on the fence and haven't really taken a position at all, like start today, take a position. Even at $100 a month gets you in there and get you started. Start a Wealthsimple account or a Questrade account. It's so easy to do nowadays. It's easier than online banking. What are your encouragements and thoughts there, Josh?
Yeah, yeah. People really have to, do their own research because the things that are being told to you are often not the right thing, and the banks and the advisors at the banks, it's like, unfortunately, like, they're just not your friends. Like the banks are set up for the bank's best interests. Buying bonds denominated in crappy fiat currencies is like that's not the answer. It's like sometimes I see in the comments when I post like this, like, well, do you like the Canadian dollar or the US dollar, better? I was like, neither. It's like, why are you holding crappy paper currency? You need to hold hard assets. The goal is to hold less of any crappy currency. You need enough liquidity to move, but ultimately, a savings account, it shouldn't be called a savings account. It should be called you put your wealth here if you want it to be confiscated through inflation account. It's like that's what it should be called. There's you can't save. Michael Saylor said it's like there's a term for those who save in fiat currency. It's like we call them poor. And the people have made the song and the remix about it, but it is true. Like if you save in fiat currency, it's like you will become poor. It's unfortunate because that's not fair. You get paid in the crappy fiat currency, It's not fair that they can, steal your efforts and your wages, but that is the case.
Mm-hmm.
And if you don't know how to buy the high quality assets, like this needs to be your wake up call.
Yeah.
When you start seeing that official announcements are just coming out on Truth Social, and the CBC plasters them everywhere, but then you look at the market and it doesn't even move, it doesn't even budge. It's like, maybe that should be your wake up call, that you need to up level your knowledge. Get a ticket to our boot camp. Our next one's going to be on November, because a lot of people, they don't know where to start, or they need that second look. And so we give people a real good breakdown on where they should start with self-directed investments, and how you actually borrow the fake fiat currency to buy real assets, and how you actually do it responsibly.
Yes.
And so, debt is not your enemy. Debt is your friend if it's used wisely. The system's set up to move the money from the people who own to people who do the work, to the people who know how to borrow money smartly to invest.
Yeah.
And but most people just don't know how to do it. They don't even know where to start. Right?
Yeah, for sure. And I think what people should realize is that, our boot camp is not a grift. Like, we're not trying to sell you some kind of product there, where we benefit from you investing. We want to get people on the life raft so that they can actually save their family. They can save maybe some other extended family members, and we can kind of show them the pathway of how they can do this, to borrow smartly, to invest. So using borrowing someone else's fake fiat money to buy real assets in stocks, gold, Bitcoin, and so forth. This is not something that we profit from. And there's only 130 seats that are potentially available. So it is a finite resource, kind of like Bitcoin. So if you guys are wanting to up level your education, you can do it two ways. You can go online and you can start reading as much as you can and learning the history of Bitcoin and gold, or you can come to the bootcamp, where we kind of go through all of that stuff in a short 8-hour session, and you can learn all about these things, and then by the end of that, make a more educated decision. Sorry, I kind of stole that away from you, but I want people to know that we're not making anything off of this. This is just something that we're trying to do to help humanity, help Canadians win.
Yeah, I mean, we have paid solutions for some people. For most people, they're actually, if they were to go through our, call us up and go on a wait list and get a consult, it's like, most people get told, it's like, we don't have any service, that you're simply just not ready for our services. And that would probably be 90% of Canadians. And so, and even the people who do become our paid clients, we'd rather them understand everything that we're about in an 8-hour session, rather than start paying us tomorrow. So we designed that boot camp. We for the people who are just starting, like the higher level people, they need a bigger level of knowledge, but the boot camp's also designed for the people who are just starting, where we just don't have a paid solution for them. They're not ready yet. They don't have enough capital to deploy that we can earn our keep, sort of thing, right? And we don't want to see them going to the banks and getting these kind of predatory products, or the insurance industry right now, which is I believe it's predatory, right? And I would say most people are well overinsured and well underinvested, and we can, if you come to the boot camp, we can get you on a better path. So, yeah,
for sure. All right, Josh, you got anything else for us today?
That's it. I'm excited. We'll be back on next week, Trevor. I'll be in Dubai, so
nice.
We'll have a nice backdrop there. I'm not sure exactly where I'll be staying and what the setup is, but I'll be in Dubai when we chat next week.
Perfect. We'll do that. And I'm looking forward to seeing what transpires and how everything goes in Dubai. So we'll see you next week. And thanks, everybody. Get your tickets today to the boot camp. See you next time. All right, Josh, we are out.